afternoon. How's it going, everyone? We're back with another weekly watch list. Everything I'm looking for this upcoming week in the stock market: SPY, QQQ, NQ, ES, and SPX. Going to be my levels, supply and demand, everything I'm looking for, potential scenarios. Now, before we get started, first things first, thank you so much for clicking on the video. Appreciate you very, very much. If you do enjoy the watch list, if you love trading as much as I do, consider dropping a like, consider subscribing, and my favorite thing, consider dropping a comment. Let me know what you think. I would greatly appreciate that very, very much. Now, this week, we have the 4th of July, Independence Day, if you will, in the United States. So looking to be a shorter week. Obviously, market closes early on, I believe, Thursday or Wednesday. Is it off Thursday? Can't remember. I believe it's closed. I believe it's short day Thursday and then closed Friday. Could be wrong, but I believe that's what it is. It might be short Wednesday, closed Thursday. I'll double check, but nonetheless, again, keep in mind, like, institutional buying and selling is usually less on these short weeks. The volume is lower, so just being more selective with positions, being more selective with ads, cutting positions, even being even more patient for price to get to our key levels, and so on, right? Now, those are things that we should really always be doing, but we want to give it even a little bit more attention on these shorter weeks, all right? So we're going to be starting things off here. We're also back at all-time highs as well, which can also make taking trades just a little bit trickier as well. For me personally, I don't want to speak for everyone. So let's get right into it. We're starting on the weekly chart. Looking at the S&P, we have a weekly demand, small red candle, followed by a large aggressive green candle. So these are my first areas for any bounces this week. If we get some selling, it's going to be this 605.45 at the high of this candle. Okay, it's actually 605.06. I'll have to adjust that. And then on the open here, at the open of this candle, which is 600.4, which I believe I do have that actually correctly marked out here. If not, then I will update it. Yeah, no, that's right. There we go. I knew I had typed it in manually. Now, we have all kinds of demand. I don't know if I just said supply or not. I can't remember, but I'm looking at this as a demand zone. But this is a weekly demand zone that we have. I think I'm starting to say, I think I said supply as I'm listening back. So you have to drop a comment. Let me know if I said supply there. But this weekly demand zone, looking at the wick and the open of that candle, those are my first areas if we get a nice pullback. Okay, we also have a daily gap as well. On this run up this past week, we did make a daily gap. Now, not all gaps get filled, but this daily gap is also right at 600 as well. So if we get underneath 603, meaning we would be breaking that wick of that demand on the weekly chart, if we get under 603, very likely for price to come down and fill this gap, which is going to be here at 654. So a retest of 600 and that daily gap looks good. I would even consider taking some 600 calls, with 1 to 6 months expiration as well, if that were the case. If we really get down there, that really nice looking area. Okay. So, anyways, outside of that, we just have our previous day high at 616.39, our previous day low over the previous day high. No, again, because we're all-time highs. No, zones here other than I have a whole psych number mapped out here at 620 as a potential profit target if we get over this previous day high. I do have a demand zone here as well. I need to go look to see exactly which time frame it was on, because I did mark it out on Friday. So I'm just scrolling through here. I watched the 4 hour, the 3 hour, 2 hour, the 1 hour, 45 minute, 30 minute for supply and demand. So let's go down to the 45 minute. It might have been 45 minute. 45 minutes. So we have our 45 minute demand zone here. This is going to be the open and the wick of that. It looks like we got close and started to bounce a little bit there. So I'm going to be typing that in here. 45. I'll do it just like this, right? 45W. That will show me that it is the wick of the 45 minute demand zone, right? And then all I'm going to do here is do the same thing. I'm going to do 45O for the open, right? Open or body. Could be B. Sometimes I do B, sometimes I do O. Now, I'm not going to mark this whole zone. I could bring this up here. I just don't want that big of a zone on my chart from 612 down to 610. So I'm going to keep it where it is, and I use the 15 minute for those zones. So as you can see, we had our 15 minute high here, the previous day high. I brought that zone down to about here. I'm going to keep it roughly the same here as well. I don't want to stretch it all the way up into this area as well, because likely if we do break under the wick, under the open of that candle as well, price is very likely to move back down to the previous day low. Okay, I don't want to have this huge zone on the chart. This is good enough to me. I could stretch it up to here, but I'll leave it there. So outside of that, we have all kinds of demand going on underneath the previous day low as well. Let me get rid of this level here. It's a mistake. But underneath the previous day low, all right, underneath this 610, my next support is going to be the 608.35, which was resistance, turn to support that previous day low. And then we just have all kinds of demand here as well. So looking at the chart, right, first things first, under this 608.35, my next area support is going to be the 605.54. But again, we have that weekly wick just below. We have a 3-hour demand zone as well, which is also the start of this, where this daily gap would be as well. So if we go over to the 3-hour, we can see that pretty clear. So here's our 3-hour demand right here, small red, large green. Here it starts at 603. We have the open and the wick marks. We have the weekly wick in there as well. So I'm not going to be looking at shorts here. Usually, if there was space between these zones, I'd be looking at shorts between 605.61 and down to 603.38. But I'm not going to be, because we have that weekly wick. We have the 3-hour demand zone as well. So really anywhere between the 603 to 605 seems like a high probability for a bounce, okay? Underneath that though, underneath this gap, I'll be looking for that gap fill down to 658 area. And in that area as well, we also have a 1-hour and 45-minute demand zone. So if we come down here, we have this 1-hour demand right here. It's also a 45-minute demand as well. So we have our 1-hour small red, large green. I know this was based off of the news last week, I believe. We have the open and wick of that candle as well. And then we also have the 45-minute demand zone there. If we go to the 45-minute as well, it's going to be the same exact zone. So as you can see, small red candle. And then we have the wick of that candle marked as well. And then in that zone, right at the daily gap, we also have the weekly open. So there's just a lot of demand usually, which is, again, pretty common when we have these large moves up, okay? We also have this former resistance I'll keep on the chart, but if we break underneath the 603, I would definitely be looking at shorts for price to come fill this gap and bounce that weekly open in 600 area as well. Seems like I have another zone here on my chart. I am curious to kind of go discover what exactly I had marked out there, or if I'm just going to be deleting it. Let me double check on that. You could justify this. I think I do have this marked as well. Underneath the daily gap down into the 500s again, this 4-hour could be potentially demand, right? Man, look at the volume on those candles. 31 million and then 35. That's insane. We've had daily candles with around that type of volume recently. But if we go down to the smaller time frames here, I do have these marked here, this 1 hour and 45 minutes. So let's go back to the 1 hour. I know I'm spending a lot of time on SPY here, but again, we do have a lot of these zones. Okay, so this was clearly just a 1-hour zone I was marking out as well, a potential if we get below there. So this potential 1-hour demand right here as well looks pretty decent. Small red candle followed by large green. It is underneath all this demand. But then here as well, we have this 1-hour demand zone. Small red, large green. We have a lot of that going on. We have the open and the wick of that candle mapped out as well. But then also on the 45-minute, same zone, I'm also marking out this as well. I have the 45-minute body of this candle in here too as well. If we zoom in here, right here, this one here, I believe the 45-minute body of that demand zone. So again, that's all the way down here at 595. So be quite a way, but that's really what I'm looking at as far as demand goes. Again, we have a whole lot of it underneath the previous day low. We'll be looking at shorts down to 608. Below 608, we get down to 605, but really between 605 and 592, there is tons of demand here. I'd be very, very cautious myself personally looking at any shorts. I'm actually going to go ahead and remove that off the chart now, but we have all kinds of demands in here, the daily gap, the weekly demand, all kinds of stuff in here. So I will be paying close attention to that this week. And the only thing I'm skeptical about is that 1 hour that I just marked. I may or may not keep this on the chart. You let me know in the comments. Would you be keeping this if you trade supply and demand? Would you be keeping this as a demand zone here? Just because it's underneath a major area, this daily gap, where price, if we were selling through it, would probably rip right through that. And then we also have this strong demand just below it. So, let me know what you think, right? So that's everything on SPY. ES is obviously going to look very, very similar. I don't think ES has the same weekly demand. I think it's a green candle there, if I remember correctly. It is, so I'm not going to be marking that out. But of course, I'll be looking at it on SPY. All I have is 6,200, previous day high, previous day low. Below that, we have this 3-hour demand zone, same one as SPY, right at 6,100 as well. It's 1 hour and 3-hour demand. And then that 1 hour previous resistance, we kept rejecting off of that when we were in that range last week before we broke out of it. So I would like to see that retested at 60.81, but below that, we have this 1 hour demand zone here, same thing on SPY, and then the same demand zone here on ES, this 1 hour wick, 45-minute, body, and so on here on ES. I'm going to even just double check here that it's the exact same situation that we have going on, and it is. So I am going to mark this really quick. That 1 hour wick, that is not right. Hold on, what do we got going on here? I'll pause this and come back. All right, we've got it mapped out, but it's going to be the 1 hour wick. We're on the 1 hour here. We have the 1 hour wick, we have the 1 hour open, and then this last level here is going to be the 45-minute open as well. So if we go down to that, we can see that here as well, right? So this area here, all the way down here at 60.36, down to 60.32. So that's all I'll be watching on ES. Let's head over to QQQ. I'll try to get through this quickly. I know we're already pretty deep into this video. Very similar though, 550. It's ironic, not ironic, but kind of funny. But like, I marked out this, I believe, in last week's watch list or just after, but I just marked out 550. And where did we come up and reject to a T? 550. So if you don't believe whole cycle numbers work on these large indexes, there's some proof for you right there. But same thing, we have our previous day low, which is also a 45-minute demand zone. And then same thing here as well. I believe it's the same 45-minute demand. Yes, it is. So it's going to be our 45 open, our 45 wick. Looks like we're actually flagging here right now. So we'll take a look at that one in the futures open tonight. Below 544, my next support is going to be down at 541.5, 539.35. If we go back out to the hourly here, same thing. We have all kinds of demand. We have our 3-hour demand. We have our daily gap where if we break below, by daily gap low, that just means like that's where, if I show you on the daily, that's where I know that if we break below this low, this daily gap, this is the gap I'm looking at on the daily. This is the low of that daily gap, right? If we break below this, then price is more than likely to get here and fill this gap at 532. And we also have that same weekly demand as well. So I have the open and the wick mapped out on that as well. But again, 3-hour demand, we have the daily gap, we have this 1 hour demand as well. But then it's also right here, this 1 hour demand, which is also turns into the weekly wick as well. So just lots of high confluence down here. This 535 would really have to hold. If we break below that, we have our daily gap and 30-minute demand here as well. But then we have the weekly open, and then we have the same demand down here, the 1 hour, the 45-minute, and so on. So just lots and lots of levels. It does look, don't get me wrong, if you're looking at this and you're like, man, that looks clustered, it looks like a lot of levels. Trust me, I understand. My main ones I'm looking at are previous day highs and lows, but those, I'd rather have them on the chart than not. I'm not taking trades. When the price gets these levels, I'm waiting for confirmation, and I'd rather have them be on the chart than not, because I've traded supply and demand a lot. I've seen it work. I've seen it be high probability. I want to keep them on my chart, right? Especially if it prevents me, if I don't have them on the chart, just because I think, oh, it's too many levels, and I end up shorting, and I ended up shorting into that demand zone. That is a mistake I have taken too many times. So I won't be doing that. But the biggest ones I'm looking at are that weekly demand, high time frame, 3-hour, 2-hour, 1 hour. Those are going to get the hierarchy of importance when it comes to demand over 45-minute or 30-minute demand. So looking at NQ to wrap it up, we have the previous day high. We have that same 45-minute demand, the weekly, the wick and the body as well. So again, if we look on the 45-minute, we can see that very, very clear. If the price comes down, I'd like to see a bounce here. And then going back to the 1 hour, if we zoom out, we have this 4-hour demand and 1 hour demand here. Underneath that, we have 1 hour demand here, and then the same 1 hour and 45-minute down here. And then again, former resistance. Again, this is not a level I'm looking to take a trade at. It's like, let's say I'm short underneath this demand to play down to this demand here. Maybe this is a price target along the way. It could be a potential bounce area. That's why I like to keep these strong support to resistance flips or resistance to support flips on the chart. It was support and support, resistance 1, resistance 2, almost resistance 3, or resistance 4, has not retested as support. So it just looked like a strong level. I have that marked across all the indexes. And then lastly, which I did delete on SPY, but nonetheless I have it on the other ones because I do watch, as I'm day trading, I'm watching NQES, SPY, and QQQ, and I'm basing my trades off of all of them at once. So SPX, lastly, previous day high, previous day low. Don't do supply and demand here. I'll just be watching this little gap we have here in price, right around 6,100. And then, of course, we have our daily gap as well. SPX loves to fill its gaps. So if we get below this daily gap here at 60.59, I do have a previous day high here at 60.50, but price would be more than likely to come down and fill this gap at 60.29, right? So that's going to be everything I'm watching. Long watch list today, maybe the longest one so far. But again, we have a lot of demand zones going on. We have a lot of key levels. But again, it is also a short week, okay? I'm looking to price to get to these levels, show me A+ confirmation, get a starter position, look for ads, set the risk, and let it go. So anyways, thank you guys so much for watching the video. If you're celebrating the 4th of July, if you're obviously American, happy 4th. I hope you guys all have a fun, happy, and safe week and a great week inside and outside the market. And I will see you all in the next watch list. Peace.